So in this video, I want to talk about precious metals, namely silver against the euro, silver against the Australian dollar, gold against the Hong Kong dollar, and gold against the Australian dollar. So essentially, we've seen a massive sell-off in precious metals. Starting with the silver against the euro, that's a massive bearish candle there. Looking at the Australian dollar, silver against the Australian dollar, same thing. Gold against the Hong Kong dollar, same thing. Gold against the Australian dollar, same thing. So sell-off candle. Next thing I want to talk about is New York balance declines. It's kind of at new all-time highs. It means the market breadth is quite strong, applying risk on. Same with the New York new highs and new lows index. It's kind of made a new high recently. Junk bonds, it's kind of looking to go up to new highs as well. So this is a fairly bullish kind of environment at the moment. Small caps haven't reflected that, so that kind of indicates to me that this might not be a complete bullish move, but it is, at least on the short term, quite bullish. You look at the S&P 500, it's closed much higher, it's gapped higher. Same with emerging markets, it's kind of shown some pretty bullish movement. It's broken out of its trading range. So these kind of risk-on assets have been fairly strong just recently. So quite a big reversal. Oil, not too much of a signal there. You can see the same thing has happened. There's been a big sell-off in bonds. If we move on over to currencies, doesn't look like risk off currencies. Well, it does actually look like the Swiss franc has weakened quite a bit, which kind of implies risk off as well. Risk on, sorry. So when the Swiss franc and the yen weaken, which is what it's shown here, that kind of implies a bit of risk on as well. So there's quite a lot of risk on going on. Massive sell-off candle. So that's kind of, to me, indicating that I should start selling out of my positions. System-wise, this is going to protect my profits. Correlation-wise, I'm reducing my exposure to precious metals. Technical-wise, there's this big bearish candle which indicates something has changed and it's just not a nice non-volatile trend anymore, which is what I've been trying to ride this whole time. Intermarket, as I mentioned, all things above. Previously, S&P 500 breaks higher, breadth is strong, stuff like the junk bond ETF and the emerging markets ETF look like they're either breaking to new highs or breaking out of recent trading ranges. Big sell-off in bonds, safe haven currencies indicating risk on. Sentiment-wise, gold has been talked about bullishly a fair bit recently, so that might indicate a bit of overcrowding already. At the end of the day, I'll make money riding a trend, although I didn't feel as positive about this, potentially because I don't really have any real set rules for profit taking yet. More importantly, I didn't have time to enter the S&P 500 long, which I was mulling over in my head, and it's now broken higher. So that was just due to a lack of time, so that's just something I need to manage to be able to allocate regular time to enter trades. I also didn't take any precious metal exposure off, despite the fact that if I was wanting to go long the S&P 500, that kind of implies risk on, and that implies I should be reducing my precious metals exposure if I am wanting to be risk on by going long the S&P 500. So note to myself, I'm going to need to kind of think about that and how I can do that better. So in terms of the portfolio where I'm at, I don't have a whole lot of risk on my portfolio. As you can see, I've been moving up my stop losses, which has really been reducing my risk. And I think now it's really time to start taking some of those profits. I'm going to keep a token position on, just like one leg, just to kind of have a position and continue to follow the trades, and not get too psychologically affected if this bounces all the way back, which potentially it could. In terms of the positions, kind of looking at, these are my positions that I have on, so really I'd be looking to close all of these except for a piece in the Hong Kong dollar, a piece in the Australian dollar against gold, and then a piece in silver against gold, and a piece in silver against the euro. So really it's just going to be, looking around these positions that I'll keep on. So just to recap at what the prices are that I'll be selling at. So 16.8858 for the euro. Be looking to get something roughly like that. 27.314 for the Australian dollar, and this is obviously silver against those. Gold against the Hong Kong dollar, 11,904. Gold against Australian dollar, 2224. So I'm looking to close out all my positions except for one leg. So that's really what I'm planning to do. And one more thing, in terms of how that is going to affect my portfolio. That's just going to quickly put that in now. So just bear with me a moment while I do that. So leaving only one leg in for gold against the Hong Kong dollar. So I'll be leaving only one leg in on the gold against Hong Kong dollar, one leg in gold against Australian dollar, one leg in silver against Australian dollar, one leg in silver against the euro. That's really the idea of what I'm going to be doing. So how that's going to make my portfolio look once I do those trades, it's going to look like that. So not a lot of risk on, and that's essentially how it's going to look. And because I've moved my stops up, I've got a fair bit of negative risk and zero risk, although I still have positions on. So that's it. Thank you for listening.